Good mid-afternoon on the puffy cumulus nimbus clouds on this hot low 90s right now. High humidity, 70 dew point, very Florida feel like, and scattered isolated thunderstorms have popped up out in the distance. None over the greater Bloomington metropolitan area in the Midwest. This is Vincenzo's Gold Crypto Investing, and this is Monetary and Fiscal Policy Friday. I've done a little bit today, but you guys seem to be more sheep and simpletons than shepherds and wolves. You guys need to understand what this shit is all about. You can see the commodity. Look at that. Look at the commodities. Do you notice the fucking commodities skyrocketing? I mean, come on. Look at that. It's breached and broke the Great Recession boom in the commodities, right? 12-month rate of change. It's just skyrocketing, and there's really nothing that's going to stop this. There's nothing that is going to stop that. It's going to keep going up as Joe Biden continues to print money. And then you go to these suppressed long-term interest rates. Who in their right mind right now would buy, besides the government buying their own bonds and foreign trade partners with our trade deficit, shipping us on sea containers, washers, dryers, and our consumer goods that we need, and they're taking U.S. Treasuries, IOUs, and suppressing their own currency, right? Because nobody in America is dumb enough, besides the Federal Reserve and the federal government, to buy 10-year or 20-year or 30-year treasuries. You'd have to be a fucking brain dead, right? They would commit you. Let's look at the 10-year treasury. Look at it. It's up 1.5% today, but it's at 1.457% for fucking 10 years. You're gonna hold a 10-year treasury for 1.5% for fucking 10 years? You're out of your mind. These interest rates should be at 6, 7. The 10-year treasury right now, the 10-year bond, should be at least 7 or 8% right now. If you're gonna take that year over year, fucking 8 year. I mean, you'd be better off if they gave you 8% over 10 years, but you're losing in inflation year over year. Then you got to pay taxes and capital gains. No one's buying this. The government is buying their own fucking debt. They're buying their own bonds to suppress this interest rate, because if we scroll out, and oh yes, if you go back far enough, TradingView doesn't go back far enough. It goes back far enough. Look at that. You had 16% 10-year bonds. You would get 16%, right? Because interest rates, federal interest rates were at 20%, right? Mortgages were 16.5%. You need 30% down. These are about to skyrocket whether the government wants to let them go or not. That's why we got that target up there. No matter, the federal government and the Federal Reserve are backed into a corner because the Fed's got two choices. Choice one, they let inflation run wild and gets out of control, and we have hyperinflation as they keep printing money and monetizing it, right? They're up to $5.5 trillion this year. Their national debt, on-balance debt, because they have off-balance debt, that's a lot, but their on-balance debt is almost $30 trillion now, right? It's going to be $50 trillion before you know it. And these interest rates, no matter if the government keeps buying their bonds or not, eventually our foreign trade partners are going to reject our 10-year treasuries and our 30-year notes, right? And our cash and our dollars, and they're going to say, we want to be repaid in gold. We require gold because your money is garbage. It doesn't buy us anything anymore. We lose so much money in inflation. We want gold. We want real money now, and they're going to start, and they already have stopped rebuying when their bonds are up and their treasury notes are up, and they've accepted their cash and turned it into their own currency, which pushes those dollars back to U.S. mainland, and that pumps more inflation because now we have more dollars on our mainland, right? If China's holding our bonds and our dollars, that takes them away from here, and that helps keep prices lower. But you're going to have an explosion as soon as you break this key up trending, because this is a descending channel, and those are bullish reversals. Eventually, they would have skyrocketed already, but the government's trying to suppress them, and they're doing a good job. But now you have inflation taking off more than just assets and the stock market inflation, right? Before the last 10 years, instead of consumer goods, because we were importing everything to keep the prices down, and then sending our U.S. dollars and treasuries overseas to keep them off of our soil, the inflation is it's not in just the stock market and the homes and real estate and assets now. Now it's moving into oil again because our dollar is devaluing, so oil goes up, and our consumer goods are skyrocketing. Food and energy costs now are skyrocketing, and it's only going to get worse as the 10-year treasury, as the 10-year government bonds go up to 2-3%, and that's already catastrophic and will cause a stagflation, deflationary depression, which is the worst kind of depression you can, or an inflationary depression, which is the worst kind of depression you can have. That's why it all coincides into my oil. Let's take a look at oil. We're closing above $70 a barrel, and I told you we have a 10-year or a 16-year bull flag in the making, and we're threatening to break out of that right now. You see that? We're peeking our head over there, trying to now let the duck hunter. If we confirm a breakout here, you're going to skyrocket. You're going to see oil go from $70 to $100 essentially overnight within a few months. You'd go up. You would have a 30% increase in oil because once you confirm a breakout of this, this is a bull flag, and it's a almost a 2-decade-long bull flag, and you take it from the bottom of the flagpole to the top of the flag to the point of a breakout. So if that was the point of the breakout, you're looking at $180 a barrel oil. That's why my oil call, look at that, with pumping volume. See that? This is ultimate bullish. The exact opposite of crypto. Pumping price, pumping volume, bullish. Now you've consolidated a little, but you've set a major new plateau in volume. Look how big that volume is compared to the last pump. You see that? The new volume dwarfs the old volume. You have massive new volume in oil. This is ultimate bullish, the exact opposite of crypto, where the new volume is way down fucking there. Look at that new volume. It dwarfs the 90s volume. And if you break out of this and confirmed it from there, my target by the end of 2022, with the U.S. dollar being near record lows by the midterms, or south of 80, and oil at the same time is skyrocketing to near 10-year highs and all-time highs at $150. And by the end of 2022, I expect to be pushing $150, if not making a run at $200. Now, yes, this could just be a fake out, and we need another year to trade back down and then come back up. That's possible, but you got to take note as we zoom in. That's why I always zoom out to the farthest out time frame that makes sense, to then move on in to make it super simple and easy to understand how to trade this manipulated market. Because if you don't know where the price was and how it got there to how it got to where it is now, you don't know where it's going. But you can see we're peeking our head over, and pay attention. I will keep bringing this up every day now, because if you come back down and retest that now 16-year used to be upper resistance, now is short-term support, underneath support. If you come back and back test it, hold it, and then skyrocket and go north of that old new recent high of 70 with more volume, and you're pushing 80, you got a long ways up, and you got a world of hurt in the U.S. economy, because that's gonna rise the food and energy prices even more, because you need energy to ship everything to where it's going. Products are going to cost more, raw material, everything's going to skyrocket, and it's going to cause a financial problem again. And that's going to coincide as the communist Joe Biden, President Joe Biden, is one big printing press and one big inflation machine, because as you guys know now, because I'm educating you, inflation is just expanding the money supply. So when they print money, that's expanding the money supply, therefore, i.e. inflation. The price of consumer goods going up, and gas going up, and homes going up, that's a effect of the cause, which is inflation, which the cause is inflating the money supply, expanding the currency. The effect is rising consumer goods, rising groceries, rising food, rising gas, all that. Because as you inflate the currency, you're chasing the same amount and then less goods, because you're paying people money out of thin air to stay home and consume those goods that with money they're not earning. So now you're chasing, more people are chasing less goods with more money. That drives up consumer prices. It's just how it works. That's how inflation works, right? That's the effect of inflation. That's the effect of expanding the money supply. And another effect of expanding the money supply is the U.S. dollar being devalued or debasing the currency. Every time they use a fancy word of fiscal stimulus. That's really a fancy word to confuse the simpletons because they're like, ooh, fiscal stimulus. I like stimulus. They're going to mail me a check, right? No, it's debasing the currency. And when you debase the currency, you lose purchasing power. When you lose purchasing power, it costs more dollars in the United States. Write that down. I'm educating you. This is very important. It costs more dollars to buy the same hamburger. The hamburger didn't change. The bar of gold didn't change. What changed was the purchasing power of your fake money, of your phony fiat dollar, right? And you can see the dollar decade over decade since we've come off the gold standards in the late 1970s and debased our currency and made it no better than monopoly money. It's gone down decade over decade. And you can see the last financial collapse. We got down here to the 78 handle and then pumped. This time, and we had a dollar index of in the mid 80s and rising, and oil at $150 a barrel. It then corrected as the currency strengthened off of a fake narrative that they thought monetary stimulus worked and the government could normalize, which now we see $28 trillion in debt later. We can't, but I expect, in summary, quick wrap up, by the end of 2022, I expect to be threatening an all-time record low of somewhere between 79 handle and 70 handle in the US dollar. I expect $150 a barrel crude oil. And I expect massive inflation to continue like I showed you. Like, subscribe, and share more Monetary and Fiscal Policy Friday to come. Peace and love. Peace and love.